Hello everybody and welcome back to the channel. Let's go ahead and take a look at Adobe stock and see if you'd be a good investment to add to our portfolios. Adobe owns a bunch of software that you can use to either edit videos or photos, and they have popular apps that you probably know of such as Photoshop and also Premiere Pro. So if you haven't heard of the brand before, basically it's used for people in the photography industry, video content industry, anything related with editing or just making something look better, anything related with editing pretty much, or just being creative. Now the company is down year to date about 26%, which is around $123, which is weird because this is also being speculative of the tariffs that is going on in the United States right now. And when I say it's weird, it's because this company is a software company. So it's not really selling a product where the tariffs are gonna affect it. So I'm not sure if it's because it's gonna get more expensive for the consumer, so they might stop but not investing but using this type of apps. So maybe that's what's going on with this stock. I really don't know, but that's my guess. Now if we take a quick look at this chart, we can see that its revenue has been increasing year over year. And one thing I really like you to take a note of is right here where it says subscription, product, service, and other. You can actually see that the subscription line is the one that has been increasing the most, which is what I was just talking about. Why is this company falling in price due to tariffs when most of its revenue is from subscription? So let's go ahead and take a look at the stock, look at its numbers, its intrinsic value, and see if it would be a good idea to add to our portfolios. Now let's take a look what Wall Street analysts are saying about this company. Out of a total of 39 analysts, it has a buy rating of 4.12 out of possible 5. It has 18 strong buys, 8 buys, 13 holds with 0 sells and 0 strong sells. Now, this isn't the intrinsic value we're going to be taking a look at, but analysts are estimating this company to be worth at an average of $499 with a high of $640 and a low of $380, which we are already below that. As you can see, this company beats its earning every single time, and it's expected to do so all throughout 2025, even in Q1 of 2026. And if we take a look at the annual EPS estimates with the annual revenue estimate, we can see that the company will be increasing from 20.36 to 22.82 and from 23.47 billion to 25.74 billion. Before we even start taking a look at the intrinsic value, let's just see if it would be a good idea to even continue looking at this company. And how we're going to do that is we're going to compare the PE ratio compared to the earnings per share compared to the current stock price, and also we're going to compare it to previous years. For example, let's go back, I don't know, let's not go too far, right here in 2020. Okay, the PE ratio for this company in 2020 was 51. It had earnings per share of 7.58 and the stock price was 386. So let's break this down for a little bit. Okay, the price of the stock is currently lower than in 2020. They currently have more earnings per share than in 2020, and their PE ratio is lower than in 2020. PE ratio basically is what people are willing to pay for the company. Okay, how many times more? So in 2020, people were willing to pay 51 times more for this company with $7 per share in EPS. Fast forward to first quarter of 2025, company has earnings per share of 15, which is basically double than in 2020. PE ratio is 28, which is basically half of what it was in 2020. That means people are now paying only 28 times instead of 51 what the company is worth for more sales per share. So instead of 7, now you have 15, and the stock price at the time was 438, a little bit higher, yes, but you got to take into account that you have more sales. So fast forward to that, as we just saw here, by November 2025, it's estimated to have 20.36 in earnings per share and a PE ratio of 16, so even less, and the stock price is currently down. So far, this is a good indication to me that this company is worth taking a look at even further. So let's go ahead and do that. Now, this isn't the intrinsic value of Adobe yet. I know this says intrinsic value, but this is the discounted cash flow. Okay, so in the base case, the company will be worth 453. The best case 596 and the worst case 362. So we even have a little bit more upside than where it is now. Now, if you see the company's numbers for the trailing 12 months, I mean, it's pretty much everything in the green. The company is growing and making more earnings. Also, take a look at its assets compared to its liabilities. It pretty much has double the assets of what it has of liabilities. And one thing I love to take a look at is the return on invested capital is currently at 30%. This means it's getting a 30% return on the capital invested. I mean, it's pretty self-explanatory. And its free cash flow margin is 41%, which is great. And I mean, it has a gross margin of 89. Usually, this isn't the exact way to indicate if a company has a moat, but if they have a gross margin of over 40%, it tends to tell you that this company has a moat, meaning it's pretty much nobody in its sector or in its market can compete it in terms of Photoshop, Premiere, Illustrator, and those kinds of apps. Now let's go ahead and take a look at the intrinsic value of this company. We got to tap in the ticker symbol, and now we got to find the growth rate projection, which for Adobe is 8.9. Let's go ahead and type 8.9. And now with the original Graham formula and the updated formula, this is currently a buy. For this company, you'll be making an upside of about 16 or 3%, depending on which formula you like to use. And this analyst revised formula, this company is still a sell. I personally, if you've been following the channel, I like to invest in companies with a margin of safety. That means if I add a margin of safety of 35% to this company, I'd be willing to buy it at about $230 per share. Do I think Adobe is going to fall to $200 or below $300? No, I do not. Okay. I think if I'm lucky enough to get this stock at 320, maybe 315, maybe even 350, which is very close to the price that it is now. Actually, it's at 343. So yeah, I'm expecting this stock to drop a little bit lower, and then maybe I start opening a position. If it does fall down below the 300s, I am going to open a position, but right now I'm still waiting. And if you're interested, guys, I do have a Patreon. It's in the link below, that I tell you what stock to buy in real time. I've been pretty much updating that about 2 or 3 times a day because I've been buying a lot of shares with this market dip. You know, buy the dip. It's not time the market, it's time in the market, guys. So that's the best advice I can give you, even though I'm not a financial advisor. If you enjoyed the video, please consider leaving a like. Don't forget to subscribe, and as always, I'll see you on the next video.